Welcome back. Well, there is some pressure which is emerging in the markets because the mid-cap index is now at the low point of the day. It's fallen around 0.4%. We have the Bank Nifty, which has given up a lot of its gains from the top as well. So up around 0.3%. To put it into perspective, it was up around 0.6% when we did start the show. A lot of stocks under pressure in terms of the frontliners. So we have Bharti Airtel, which is now showing an accelerated loss of around 5% on the Nifty. A couple of the other stocks from the FMCG pack, such as HUL, Eicher Motors from the auto space, also under pressure. So it's really broad-based in terms of losses at this point. But over to Manisha. She has a guest with her this afternoon. Manisha.
Ekta, thank you so much for that. Joining me now on the show is Kunal Shah from Nirmal Bang. Kunal, hi. All that I want to talk about right now is gold, because we've seen strong gains. And contrary to what we saw last year, where the dollar returns on gold were lower than rupee, this time it's quite different, because gold until now is 1% up in Indian terms, but it's 3% up on COMEX. First of all, how do you read on that?
Because of the, we've seen a sharp appreciation in Indian USD INR pair. We've seen almost 2% of gain coming in, and that's one of the reasons why India is not able to move up in line with what is happening with COMEX. So international gold is moving up quite abruptly. So last year we've seen underperformance by the international gold, and domestic gold prices are up by 6-7%. But this year it is the opposite story right now. So far, international gold is doing well, and because of the rupee appreciation, we are not able to clock the same gains. And also, the domestic gold is being sold in the discount in physical market by almost $20-25. So this is why the gold prices on M6 are not able to catch up with the international trend.
Clearly that. And also, when you look at the international gold prices run up, most of the reports now seem to be suggesting that the last 1 month or the last $40-50 of a jump up clearly comes in from the fact that China seems to be buying, not just in the physical market, but the way Shanghai net longs have increased since 20th of December clearly are one of the reasons.
Yes, the Chinese demand continues to remain strong, and not just from the local investors, but also from the government. For the first time after a long time, we've seen Chinese central bank releasing the data that in the month of December, they've bought 70 tons of gold. So it is quite a surprise for the market, because China was not releasing these numbers so far. So it's not just China, it's a lot of central banks, Turkey, Russia, China, all these central banks are buying gold. So what if tomorrow dollar declines quite sharply because of whatever is going on? So that's why central banks are, hedging themselves by buying gold right now. So gold is the best buy going forward, irrespective of the volatility which arises out of the monetary policy decisions or the inflation data, whatever. But the structural view on gold continue to remain optimistic, and I am of the view that whatever decline you see by 2-3%, it's a great buying opportunity. And I think 2023 gold really should outperform many asset class.
It clearly is outperforming silver, for one, to begin with, and various other asset classes. I mean, as you mentioned, when you look at the equities markets internationally, or the domestic equity markets, which are trading in the negative or just about flat, gold clearly seems to be trading in the positive in comparison to that. Kunal, another thing, when you do look at the jewelry sales, we've seen the last 1 month being quite dismal for the Indian market. So clearly, on physical buying in India isn't so strong. Would you say that investment as a theme finally seems to be picking up?
Yes, silver, industrial and investment, both demand continue to remain strong, because this year the expectation is that the demand of silver is going to move up in a double digit, more than 15% rise in demand expected in 2023. And the supply side, in last 10 years, we have not seen any incremental growth in the supply. So majority of the silver, 50%, more than 50% of the silver comes from the secondary mine, lead and zinc. So we have not seen the supply catching up, and the demand side is getting stronger and stronger, and hence a lot of investors, even in India, we've seen silver ETF starting, and a lot of traction is coming into this kind of product. So investment demand for silver, because the fundamentals looks pretty strong, is also very robust right now. So strong industrial demand and strong investment demand is going to take silver to $28 in 2023.
$28. All right. It's trading at around $24 as of now. But Kunal, another question, and this is about the Indian investment demand when it comes to ETFs. And while we did see some redemptions in 2022, silver clearly saw some buying. What is the pattern that you see for this year? And would you advise as ETFs the way to go to when you look at gold and silver?
Yeah, it's definitely a good way to invest in because if you are going and buying silver in physical market, the discounts and sometimes premiums are pretty vague in different parts of the country. So if you buy ETF, all those costs is basically smoothen out. And I would recommend to go along if somebody is an investor. Silver in ETFs are a very good product to be in silver. So I would recommend to go along in silver ETFs.
Point taken. Thank you so much, Kunal, for joining us. So gold and silver both a buy, and if you were looking to invest, silver ETFs is a better way of looking at it. And gold also, as Kunal said, looks like this could be yet another year when gold could outperform various other asset classes. Well, with that, it's time to take a break. Coming up next after the break is Business Lunch with all the action forward.